When will the next real estate crash happen? So in this video, you're going to learn where to put your investment dollars and what to watch out for given the current market conditions of the real estate market. Maybe you're not aware, but there's a number of statistics out that are showing what's happening in the market right now. We're going to go over those. There's been predictions from people that are in the know and do this type of thing and what's going to happen and when. And we're going to talk about markets crashing and markets going up, sellers markets, buyers markets, and how you can play both sides of the fence and still build your wealth and make money. So when is the real estate market going to crash? Let me just tell you, not anytime soon, okay? With rates and the Fed keeping rates lower through 2021, we're going to see a continued market of demand greater than supply. Home builders cannot build homes fast enough for the number of people who want to buy them, and the strength of the real estate market is expected to continue through 2021 and into 2022. Those who report about these things suggest that as prices continue to increase, affordability will soon become a factor, and if rates start to increase, affordability will be a factor. But the Fed has said that they are okay with inflation being a little more than the target of 2%. And the reason they want to do that is because they want to pay with cheaper dollars later of some of the debt. The current market situation is until prices reach a peak where affordability really starts dropping or interest rates go up, you're going to see this really strong market for a while. It's predicted that maybe late summer, early fall is when things will start to more stabilize, but not crash. There's just too many people that need homes. The other thing is you have the millennials who are starting to get into the home market, and there's lots of them. And as they move into the market, they also are looking for homes. And then, of course, you have the pandemic, which has caused people to want more space, to work from home, to work remotely, which means maybe they need an office space and they want more space rather than living in a smaller space in the city, which was expensive. Now maybe they want a pet, they want to spread out, they want room. When we talk about inventory right now is about 52% lower than it was last year. In Arizona, they have days of supplies, not months like normal. Certain parts of the country, which are in smaller towns or smaller areas, are seeing an influx of people who are looking for more space, quality of life, and you have little markets that are accelerating by 15, 20, 25% year over year. So the predictions that I've seen and I've read about are basically what we just discussed. And when we get into 2022, as I've said on other videos, I think your smaller mom and pop, as they put it, real estate investors are the ones who may have some trouble because they've carried the burden of tenants not having to pay rent in some cases or not being able to be evicted in other cases. And so that burden on them is usually going to be harder for them than, say, a bigger investor like somebody like me who has multiple units and has enough cash flow. So how does that affect you in terms of your search for this question and your ability to invest or not invest? We're going to talk about whether the market's going up or the market's going down, what you should do right after you subscribe. So be sure to subscribe so that I can help you learn to earn and show you how I've accumulated millions of dollars worth of real estate and was able to retire in my late 20s and have been able to invest and continue to make money and invest and continue to make money through markets going up and markets going down. Okay, so we'll talk about that right after you subscribe. So there's really two people that want to research this question. One is, should I buy a house now? And the other is, should I invest now in investment real estate? Let's talk about buying a house first. If you want to buy a house that you're going to live in 5, 10, 15, 20 years, the answer is you probably should buy a house now. Interest rates are the lowest they've been in 50 years. Find something you like and buy it. I really like new home subdivisions because the prices tend to be a little bit more stable. Oftentimes in new home subdivisions, the frenzy of multiple people, not always, but usually, is a little less because they require people to pre-qualify with their lender before they let them write an offer. So there's a little bit more calmness there than in markets where you might have 10, 12, 13 offers all over asking. You don't have that situation in new home subdivisions. You have a price that they're asking for. Okay, resale, you have a price they're asking for. If somebody wants it, they could go way above that price. I've seen articles as much as $1 million over of list price on some of these crazy deals. So as a new home buyer, new home subdivision, if that's not possible, a used home, obviously in this market, you're going to have to write pretty close to asking price or a little over. Don't be afraid to do that if the market's going like this. The main thing I look at is what's the price per square foot of the house? How's the neighborhood? How does it compare? I like homes with curb, gutter, sidewalk, nice landscaping. Those type of homes generally do pretty well. Newer, mostly new, is what I would suggest for people starting out buying. If none of those are in your area, then try to buy something that you can fix up if you have the funds to do it, or that's already fixed up if you don't. Don't buy a fixer-upper that you're going to be unhappy with if you don't have the money to fix it up, okay? Buy something already done, pay the premium because it's already done for you and you don't have to worry about it. That's my suggestion for home buyers. For investors, a little bit different scenario. I'm buying investment property right now, and you say, well, Paul, the market's going crazy. You're right. What else is going to go crazy is inflation. And the Fed has come out and said, we're not worried about keeping inflation at the typical 2%. We may let it go a little higher. Well, okay, what does that mean? That means that hard assets like real estate are a hedge against inflation, or they help maintain your wealth, because as inflation goes up, so generally do the property's value, okay? So I like inflation, not crazy inflation, but a little bit more than 2 or 3%, because that's good for me in rents, and it's especially good for me in value. So as an investor with inflation, I like real estate, I like buying. I'm currently in a situation where I'm buying a 12 property portfolio, about 26 units, and I'm looking at the price per square foot. I'm looking at the number of doors, and I'm looking at the size of the land that some of this stuff is on, and I'm comparing that to 30 minutes to 45 minutes away where prices are double or triple for some of these things. So does it matter to me what's going on in the market around the country, what they're talking about in the news? A little bit. What matters to me more, and what should matter to you, is what's going on in your local market, and where's a good place for you if you're trying to buy a home to live, or if you're an investor to invest. I'm looking for, as an investor, best price per square foot, lowest price per door, communities that are strong and have upside. And as I've said in other videos, I love workforce housing. I don't want the highest rents. I don't want the lowest rents. I want to be above the lowest rents in the affordability range. I often say when I go online to look for properties to buy, I'll go on Zillow, I'll look for the lowest price stuff. And I'm like, how are you going to lose money on that deal? Every house around there is 280 to 500,000, and that house is 220, 180. Yeah, it's a little bit bad. It's not perfect, but I mean, come on, right? So I always look for the lowest prices because, why is Walmart successful? Because everything's affordable, right? If you look at the pyramid of affordability, how many people can afford a $5 million house, a 3, a 2, a 1, a $200,000 house? A lot of people can afford a $200,000 house. So wherever your market is and whatever you're looking to do in terms of the market and what it's doing now, understand that most people in the market are able to buy today because rates are really low and prices, although going up, haven't reached that point to where they've outstripped the number of people who can still qualify to buy. And that's when you're going to see things soften or come back. No crash predicted anytime soon in the real estate market. But let's say I'm wrong, and I have been before. So now what? Well, we're going to talk about, what happens when the real estate market crashes, and we're going to talk about that in the next video. So I'll see you there.